Welcome to TradeTheNBI.com. This is John. This report is for the 11th of October. Well, and we're in the consolidation, just like we talked about. We ended up moving more towards the short configuration here the other day as we start to see a little bit of a shakeout dip. We're well over the warning line here, but everything's still proceeding in an up angle, and so until that starts to roll over, you're going to still maintain where you're at. Not to mention, I think the numbers are out so far, October, the lowest volatility of any October ever. Not a surprise, and again, this really goes back to the fact that you can't do anything with your money yet until you have a clear idea of, some of the impacts that Congress is going to make. And at this particular point, you're still up in the air about tax cuts and a lot of the other details. Regulation is softening, and the business environment is generally positive. So where are you supposed to go with that, with the potential of interest rates rising and inflation starting? So particularly if you, with this, what there seemingly is a major reduction in labor availability, I don't know what they're going to do when there's theoretically 0% unemployment based on the numbers. That would be an interesting one to see, because we all know there's tens of millions that just aren't counted. So how they would answer that one is always an interesting situation. Anyway, the NQ here continuing to climb, also in the same kind of breakout pause. This is sort of what we've been doing for quite a while now. And the euro, nice boost back up. That again is a nice promotion. It got oversold there a bit, and finally taking off outside of the range still. And as long as it's up at these levels, you're going to see support for the S&P. A little bit of a recovery here in the TLT treasuries. I think it's short-lived. We are seeing a dip, though, of orange in that, so it could sustain itself for a fraction longer. We shall see. And USO, of course, oil. Not going to have any objections to oil's move. It's going to fluctuate right in this range, and you'll see it breaking down below there unless we see some kind of major slowdown in economic growth, because we all know that the supply side can be filled in. Now it's a question of how much demand and is it being met, efficiently, and it usually is. And gold, the shiny metal, back. Probably not going to survive. Much of this is going to retrace, come back, fill this, but it's a decent buy signal for the dip below the orange. Short-term buyers moving up, probably going to reach a peak here, so it's going to have to see the DOC red move into the next zone to start to carry it through. Still ambiguous as to how much inflation we're going to get in the near term, but I think that the prospect of it another year from now, and if their rates continue to rise, is certainly going to add strength to the dollar. It'll be interesting to see how that reacts to the euro, because you would think that would draw even larger funds from Europe to the American shores, but that hasn't stopped central banks from intervening. So here we go from an intraday standpoint. We have a nice little rally up, ended up with our little short signal. I'm going to shrink this real quick so that we can take a better look at the whole day, which started all the way from there. So we started to go up, turn around from the shakeout, peaked up here with a nice spike of the orange above the plus 13.5, but you even would have captured that here at the steel below cyan, at the same time orange above green, which is also an excellent short indicator, but you have to make sure that your shakeout has dipped below. And I particularly prefer if it moves down below the magenta. And that, in this case, broke the ABM gold anyway within those short signal. That's clear enough for me. And it took a nice dive. Didn't get a buy signal down at the bottom until the second run, which was just below the 50% retrace, which is that lovely green line right there. So it was still worth about 5 points. And then from 25, 45, 75 to where we are now. It's about the same going back up. What are you going to do in the low volatility? If that's the best you can get, that's the best you can get. At least it's right on it, accuracy-wise, so that I can't complain about. But volatility will increase. It has to. There's no question about it. Traders will be forced into it, and that's just the way it works. So it's always a lull, and then everyone thinks that it's not going to happen anymore, that it's always going to be like this, and then you go from a 10-point range or a 5-point range to 50, 80, just like that. And that's the way it works. As always, though, trade well. We'll be on the Skype chat, putting up charts as they're relevant. It's just a slow go, and it takes a while for these to develop under such small conditions. But we take what it is, and we go from there. Trade well.